sharing the views. So that's the management of Sami Hotels. The stock is under pressure. The numbers are good. I think, the commentary is what is the street watching out for from here on, and execution becomes a key as well, because doubling of revenues over the next 3 to 5 years is the target the management has. But moving on, Brigade Enterprises, let's quickly pull up that one on the screens and see what the stock is doing in trade. 7% downtick. In fact, real estate has been in focus, taking into consideration the way the first half sales volumes have panned out and the way realizations are panning out. I think the top 8 cities from reports like Knight Frank, all of them, JLL, are indicating there is pressure with real estate sales. Let's understand, what has happened in terms of the first quarter and what's the outlook looking like for a Brigade Enterprises. Pavitra Shankar, MD at Brigade Enterprises, joins in. Pavitra, good afternoon and welcome to the show, and a happy Independence Day and a happy Janmashtami in advance to you and your family. My first question coming to you is a good surge in terms of profitability that the stock has seen. How sustainable is this kind of a number in terms of the coming quarters? Because the commentary that you hear from, agencies like JLL, Knight Frank, is that there is weakness in terms of real estate when you talk about the way sales are panning out and the way prices are panning out.
Hi, good afternoon. Thank you for the wishes, and the same to you as well. We have had a good quarter in Q1 from a profitability standpoint. That's reflective of the projects that are already completed and being handed over to customers on the real estate side. On the leasing and the hospitality side, those verticals have done very well as well. Both of those portfolios are fully stabilized and increasing in terms of the rental on the lease side, and hospitality in terms of both occupancy and RevPAR. So overall, the business has done well. In terms of the market commentary that you're getting, I think across the board, Q1 has been muted for this financial year. We typically see that after Q4, which is usually a bumper quarter for most developers, with a lot of the launches and year-end targets being met or surpassed. So I think what's happening on ground is that there's a lot of sentiment being pegged to what numbers look like today versus what they were a year ago or so. But we have to keep in mind that what the real estate sector has seen over the last 2 to 3 years is it's very uncommon to basically launch and sell out projects within a couple of quarters. So that's what we seem to be pegging against. And I would say that on ground, things are still extremely healthy. In Brigade, we are launching projects and still able to sell them out within 1.5 to 2 years from the launch. Again, that's a very good thing, but many are pegging it against what we've seen, over the last few years, which I would say is a bit over-optimistic. So we are still able to reach our profitability. We're still able to reach our business plans and sales velocity that we would like to see prior to the completion of construction of the project, and still achieve the numbers that we want to see on the pricing side. In terms of launches, that's heavily driven by the approval cycle in our markets, Bangalore, Chennai, and Hyderabad. So in Q1, we were able to launch 1 million square feet in Chennai, but in Q2, which is ongoing already, we've had a number of RERA approvals come through in Bangalore. So we're already seeing very good uptake of those projects. We just completed our annual sales event, the Brigade Showcase, all of which has done extremely well. So on ground, I would say there's not much room for worry, but the issue is that people tend to peg against what they just saw happen, which is more than never before, all things happening really well, right, sort of situation.
Right. Hi, Pavitra. Varsha this side. Happy to have you on NDTV Profit. Pavitra, if you see the pre-sales growth of 3%, which is lower than the overall guidance of double-digit growth, any update on that? And onto the launches you were speaking about, any launches expected in H2?
Yeah, so as we've seen in the last few years for Brigade and maybe for others across the industry, the launches tend to get skewed towards the second half of the year. So we had that happen in our portfolio. So when we look at quarter on quarter or year over year, we have seen an increase over the same quarter prior year. And we do expect more of the launches to come in towards the second half of the year. That said, we've already got 3 launches coming in this quarter itself. itself in Q2 as we speak. So it's not that all of it is going to be pushed towards the second half of the financial year, but some of it has already been coming through. There is still, dependency on approvals, but we're working to make sure that it comes in towards the financial year. While on ground, the exact timing of the approval in each quarter doesn't really impact the overall project profitability per se. But we do recognize that we are being looked at on a quarterly basis.
So Pavitra, I'll take the conversation forward in terms of the pre-sales. The growth is around 3%, but if I see the average realization, that has seen a significant increase this time around. What is the reason for this higher realization? Is it a change in terms of the product mix, or is it prices which are increasing? What would you attribute this to?
It's reflective of both, actually. One is the same kind of projects and the same kind of markets are seeing an overall price increase that has been happening in Bangalore, Chennai, and Hyderabad and other markets as well. And specifically the mix of projects as well. So if we are launching a project and if we are selling inventory that is more higher price because it is a premium versus, a less or a mid-segment project, then we are seeing that come through in the price realization. So this will also fluctuate quite a bit quarter on quarter, although we've seen a sustained increase in our portfolio in the APR because of both these mixes. One is the markets in which we are, in which we have inventory. We've seen substantial price increase there itself. And also within our portfolio, we have moved towards from mid-segment to upper mid-segment, and in some cases, super luxury as well. So we're seeing that overall impact in the APRs.
Pavitra, what is the collection growth expected forward in FY26? If you can, guide us for that.
So in terms of last year, we did around 7,200 crores overall for the business. Leasing and hospitality will continue to grow, in similar levels because they're all fully leased. We just have about 0.75 million square feet to lease out in our commercial portfolio, and hospitality, we have 9 operating hotels and are building out a few more. So that will take time. So in terms of those two portfolios, those are more or less stabilized in terms of cash flow. On the residential side, last year we did around, or the overall real estate side, we did around 5,200 crores of collections. I would see that increasing marginally as well because many of the projects that we have launched and sold, the collections will come in as the construction progress continues. So while we've seen the bumper sales get pulled up and advanced in the life cycle of the project, the collections will still depend on construction progress happening on ground, which is stable and moving forward, per our schedules. Mm-hmm. So we'll see that all coming into the collections pipeline over the next year.
And Pavitra, a quick one in terms of the land bank that you have. What's the plan with regards to growth and to leverage this land bank?
So we, of course, are bullish about the overall sector. This is our core business. We are acquiring land in Bangalore, Chennai, Hyderabad, Mysore, Kochi, Trivandrum, across the verticals. So residential, office, retail, and hotel. And we are bullish about all of that. In the last quarter, actually, we have added about 11,500 crores of gross development value to our land bank, which is a really healthy number. And we intend to continue to do that over the course of the next few quarters and beyond that as well. In terms of markets of focus, we are again focusing on South India, Tier 1 predominantly, and a couple of the Tier 2 markets. So that's where we'll be focusing our efforts.
Got it. All right. Thank you, Pavitra, so much for talking to us at NDTV Profit and sharing your views. So that's the management of Brigade Enterprises. Good plans that are in place from here on, but the stock is trading at the day's lowest levels as we speak. Let's quickly pull up Ashok Leyland.